Gold and silver are in free fall right now, not slowly drifting, not pulling back, not consolidating, free fall. As I'm recording this, gold just broke 4,600. Silver is at 72. And every few minutes I refresh my screen and the numbers are lower. 45.50, 45.20, it is not stopping. This is not a correction anymore. This is a crash in progress. A crash that is happening while you watch this video. Friday was supposed to be the worst of it. 38% down on silver, 16% on gold, the worst single day in 45 years. Everyone thought that was it. Everyone thought the selling was exhausted. Everyone thought the bottom was in. This is pure liquidation, forced selling. Margin calls cascading through the system one after another. Traders being wiped out position by position, account by account. And it is accelerating, not slowing down, accelerating. Welcome to the hidden economy. If you are new here, I expose what is really happening in markets while everyone else is distracted by the headlines. Subscribe right now because this is the kind of analysis you will not find anywhere else. And if you find value in this video, smash that like button. It helps the algorithm show this to more people who need to see it. Now, if you have watched my previous video, I showed you exact level of 117, why silver crashed from there. But at that time, people were commenting, look, it's going up 118, 120. But anyways, before I show you the data, this morning when market opened, thousands of traders tried to sell their silver ETFs, orders rejected, circuit breach. Friday's crash was so severe that today's prices are still below the circuit limit. The exchange will not accept sell orders. People who held through the weekend hoping to exit Monday morning are now trapped. They cannot sell at any price. The system will not let them. This is happening right now. As gold breaks through 4,500 and silver crashes through 72. This video explains why and how to make sure it does not happen to you. Here's what caused this. The weapon is called a margin hike. When you trade futures, you put down a deposit, usually around 10%. So if you want to control $100,000 worth of silver, you put down $10,000. That is your margin, your skin in the game. If the exchange decides to raise margin requirements overnight, you suddenly need more cash. Not next week, not when your transfer clears, immediately. If you do not have the cash sitting ready, your position gets liquidated. The exchange sells you out automatically at whatever price exists at that moment. And when everyone is getting liquidated at the same moment, the price at that moment is terrible. Rock bottom, the worst possible exit. One margin hike is survivable. Most traders keep some buffer, some cash on the side for exactly this situation. But what if there are 2 margin hikes? 3, 4? What if there are 8 margin hikes in 8 weeks? That is not survivable. That is extermination. That is exactly what the CME did. 8 margin hikes, 8 weeks. Each one designed to drain more cash from long positions. Each one tightening the noose. December and January, they hit traders with hike after hike. Christmas Day, hike. New Year's weekend, hike. Every time traders caught their breath, another hike. Then came the kill shot, January 13th. CME switched to percentage-based margins. Now when silver rises, your margin rises automatically. A trap that tightens itself. The higher silver goes, the more cash you need, even if you do nothing. And they did not stop after Friday's massacre. Monday morning, another hike. Then another one this week. 8 hikes total. For comparison, 2024 had 2 hikes the entire year. 2023 had 3. 2022 had 2. 7 hikes in 3 years was normal. 8 hikes in 8 weeks has never happened before. I went through 20 years of CME data. This is unprecedented. Each hike triggers forced selling. Forced selling pushes prices down. Lower prices trigger margin calls on other traders who were not even affected by the original hike. More forced selling, more price drops, a death spiral by design. That death spiral is what you're watching right now. Gold, 4,500. Silver, 72. And falling. But here's the part that kept me awake last night. This morning, same day as the CME hike, Shanghai Gold Exchange also raised margins. 20% to 26%. CME in Chicago, Shanghai in China, 14 time zones apart, same day, same action, same direction. America and China, these two agree on nothing. Trade war, sanctions. They argue at every international meeting, but on silver margins, suddenly they are moving in perfect lockstep. That is not supposed to happen. Unless they are both scared of the same thing. And I think I know what they are scared of. 300